and welcome to the CNBC TV 18 special, The World Economy in 2015. In a few weeks from now, we will all be looking at how the world economy will emerge, and in subsequent weeks we are going to get to a series of big economists on how they see the various asset classes, the various economic powerhouses of the world emerging in 2015 and panning out. To kick off the series, I have with me George Magnus, Senior Economic Advisor at UBS. He's a man with 3.5 decades of experience in global economics and in global financial markets. Mr. Magnus, thank you very much for joining me. Actually, there are crisis spots across the globe. So let me start with the land of the rising sun, or the land of the falling yen, as it were. I mean, how do you see things panning out in Japan after that 80 trillion yen announcement from the Bank of Japan? Now there is a fiscal stimulus also that's underway. Do you see the yen at what, 120 in a few months' time?
Well, my view is that I think it's going to go even further than that. I mean, I think what we've learned from Japan over the last 48 hours, if not, let's say, over the last, several months, is that the government's policy is not working, or the policies are not working the way they intended. I'm not sure that everything can be attributed to the rise in the consumption tax. But it was an untimely change. It means that there'll be even more pressure on the Bank of Japan to continue printing money. And if there is an election, which is now being speculated, then what we'll really have to hope is that the Abe government is capable of delivering the kind of reforms that everybody was so optimistic about a year ago, but which kind of ran dry pretty quickly. So all we've got left at the moment is monetary stimulus and perhaps a little bit of fiscal stimulus as well.
Well, what would be the consequences of this Japanese monetary come fiscal stimulus on other emerging markets? I noticed in your blog a very interesting article saying that it will mean the long march of renminbi appreciation is over. Can you elaborate on that? Because that could be a direct competition to India if the renminbi were to depreciate.
Yeah, that's kind of an interesting phenomenon, because so far the depreciation of the yen, let's say from 75 or 80 yen to the US dollar to about 115, 116, and it's a big move. But actually the trade-weighted values of Asian exchange rates has held pretty stable, and actually the rupee, as you know, has been very strong. But I don't think that's going to last if the yen drops another 20%, which I think it could do. And I think under those circumstances, there will be some decline in Asian exchange rates. And I think, actually, interestingly, the renminbi will be one of the currencies, and of course, because it's China's, it's a very important one, will be one of the currencies that will depreciate against the US dollar. There's partly for external reasons, but also for internal reasons as well, because China's economy and its property market are continuing, or will continue, I think, to slow down. So I think the fall in the value of the RMB, I think, will be of some significance, not just to currencies in Asia, but wider world as well.
Okay, I'll come back to the East in a bit. The more live news now is that the ECB is likely to indulge in more unabashed quantitative easing. It's advising buying government bonds. How will the euro pan out, do you think, over the next few months? And how will policy pan out?
Yeah, this is turning into a bit of an old chestnut,
yes,
as we say in English, because the ECB and the governor, Draghi, Mario Draghi, has been telling us for some time, actually, that the balance sheet of the European Central Bank, might expand by €1 trillion. And he's certainly sounding very dovish. The problem is that Mr. Draghi has a big political problem, which is to keep the German Chancellor Angela Merkel on his side in support. And we know that the German position is not quite as enthusiastic about sovereign bond purchases as as the ECB might be. It's legally entitled to do that, but they may be quite restrained in what they actually do. So this is a bit of a political tug-and-war game, which may end up with full-blown quantitative easing if the crisis in Europe deteriorates more.
Okay. Well, you told me that you wouldn't be surprised if the yen weakened even up to 120 and beyond to the dollar. What's your best guess about the euro itself, say, in the next 6 months or in the first half of 2015?
Well, I think the euro, my guess is it probably won't go down as far as the yen from where we are today, because I don't think the ECB will choose the full freedoms available to it in terms of quantitative easing. But I do think that the euro will drop, perhaps to around 110 or maybe even 105 against the US dollar, let's say by this time next year.
Oh, now that's quite a level. It was the strength of the dollar, especially vis-a-vis the majors, that made the Fed falter a bit about its rate hiking cycle. We heard Stanley Fischer speak about it as a worry. How does all this, place the Fed rate hiking cycle? Where do you see it? Is it mid-2015? Is it further out?
Well, my view is that the economic case for higher policy rates in the United States is not proven convincingly whilst inflation is so low. But let's suppose that over the next 6 to 12 months that there's a little bit of pick up in wages and maybe in the consumer price index. I could see interest rates starting to go up a little bit in the United States next summer. But the dollar could play a very, very influential role in the timing. And my guess is that if the dollar continues to strengthen a lot, which I think it will, that it could push back the moment when the Federal Reserve raises interest rates, perhaps even towards the autumn or the end of the year.
Okay. Well, now that I've completed the two key Western economies, let me refocus on the East and especially on China, a place on which you have focused so much. What is your sense about Chinese growth itself? Are you seeing it, glide gently lower from 7.5 to 7.3, or will 2015 see much lower growth rates?
Well, I'm pretty sure that the Chinese government would like to see growth come in next year at around 7%. I don't think they're terribly religious about, where the decimal point is, but 7% I think would be an acceptable number. The question really is whether China's economy is basically predicated to drop to a growth rate appreciably below that, which I think it is actually. And I think we could see maybe at the beginning of 2015, the first quarter could actually see a growth rate, if you look at it quarter on quarter, in which economic growth could be below 6%. So one would have to expect that there would be moments when China will try to use some of its policy tools to keep the growth rate from dropping too much. But my major kind of view about China is that the downswing in residential property and other investment spending is going to continue for the foreseeable future. And that actually growth in China is going to end up probably over the next couple of years coming down to around 4 or 5%.
George Magnus, I have to take a break at this juncture, but I'll be back with a lot more questions on how you see the world in 2015.